This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, September 11th, 2015. Euro dollar. So the market's seen a bit of a bounce in recent trade, though rallies are expected to continue to be very well capped with the overall downtrend intact. At this point, there is some resistance coming into play around the 1365 area, but as you can see, going back to several months back, going back to May, and then looking more recently in June, the market's has some strong internal resistance below 115 and into the 114.65 area. So 113.65 to 114.65 should be a good zone for looking for the market to stall out ahead of a resumption of declines. At this point, only a close back above 115 would compromise the bearish outlook for the euro. Sterling dollar. So cable's seen a nice recovery over the past several sessions, with the market now trading back towards 155. But 155 is going to be the key level to watch. A close above this level will put the pressure back on the top side, while inability to close above 155 would suggest that the market's putting in a lower top ahead of a resumption of declines, eventually back towards next key support in the form of that low that we saw going back to the 4th of May at 150.89. Dollar yen. So dollar yen rallies continue to stall out, with the market looking to put in a lower top around the 121.75 area ahead of a resumption of declines back down towards those crazy lows that we saw the other week at around 116. At this point, the market would need to establish a close back above 121.74, that high that we saw going back to the 28th of August, to compromise the outlook and put the pressure back on the top side. Euro Swiss. So Euro Swiss has been very well bid over the past several weeks. The market has most recently taken out a 109.62 previous high to open the door for fresh upside towards a measured move objective at 112 further up. At this point, any setback should be very well supported, with only a breakback below 107.14 to compromise the recovery outlook in Euro Swiss. Aussie dollar. So Aussie's seeing a bit of a correction in recent trade, with the market trading back above 70 after trading down to as low as the fresh multi-year lows that we saw just a few days back, or just shy of 69. At this point, though, any rallies are viewed as corrective, with the market seen putting in a lower top ahead of a resumption of declines below that recent multi-year low and down towards a measured move in the 68.30 area. Any rallies, though, should be very well capped, with only a break back above 74.40 to compromise the bearish outlook. Dollar CAD. So dollar CAD has seen some sideways chop over the past several sessions, though the market clearly remains locked within a well-defined uptrend. At this point, a higher low is sought out in favor of the next upside extension beyond the recent 11-year high at 33.54 and towards psychological barriers at 135 further up. Only back below 128.60 would compromise the bullish outlook for dollar CAD. Kiwi dollar. So Kiwi remains locked within a well-defined downtrend, and the market is now focused on a retest of that low that we saw going back to the 24th of August at 61.30. At this point, any rallies are viewed as corrective, and only a breakback above 67.40 would compromise the bearish outlook. SPX 500. So a lot of consolidation over the past several sessions in this market, with the market seeing a contraction in the range as the price gets tighter and price action gets tighter and tighter. But a lower top is now sought out below 2,000 in favor of the next downside extension back towards those recent lows that we saw in the 1830 area and below 1800 further down. Really only a close back above 2,000 would compromise the bearish outlook. Gold. So gold has seen a bit of a bounce over the past several days, and spacing out by those 1073 multi-year lows below 1100. And at this point, though, the market has seen a bit of a weakness over the last few sessions, though setback should be very well supported above 1100 in favor of a higher low and resumption of gains above 1170 and towards 1233 further up. However, if we do see a daily close below 1100, that would compromise the recovery outlook and put the pressure back on a retest of the lows and potentially down towards psychological barriers at 1000.